Good afternoon, everybody. Welcome to PitchForce. My name is Max Shapiro. I'm the CEO and founder of PitchForce and People Connect. I'll tell you a little bit more about our businesses in a minute, but first what I want to do is tell you what's going to be happening this afternoon. We have 6 or 7 companies. We're not sure about whether one company is going to be able to make it or not, and they are all going to start with a 1-minute elevator pitch. After the elevator pitch, the panel is going to vote immediately on a scale of 1 to 5 how much they like the company and whether or not they want to hear them in the second round. For the second round, we're going to take the top 5 companies. They will do a 4-minute PowerPoint, tightly timed, 4 minutes of questions and answers, and then about 8 or 10 minutes of feedback. So not all the panelists will get to ask questions, but they'll all be able to give us their feedback. So that's what's going to be happening. And their goal is to get an invitation from one of these investors for another meeting. Hey, I'm interested in what you're doing. Love to talk to you. Or I'm not interested, but I know somebody who might be. And I am really excited tonight because not only do we have a lot of very good companies, but we have an all-star panel. Everybody's been here before. They're awesome. And you'll see why I'm saying that as you hear their feedback later on. A little bit about what I do 55 or 60 hours a week, which is have a great time working. Doesn't feel like work at all. I love helping early stage high tech companies build great teams, and I love putting them in front of investors. So People Connect, our company, is a 21-year-old recruiting firm that I say is the most unique recruiting firm in the world. And you're probably wondering how in the hell can somebody make a statement like that? And the reason is that a couple reasons. Number one is we have a model we call employees without paychecks. We're able to find people who will work for options only for about 3 months while the company closes its A round or its seed round. These are people with domain expertise, startup experience, and they're risk takers like all startup CEOs. And they say, instead of whatever my base salary is going to be, $8,000 a month, let's say, once the company gets funded, I'll take that in options or equity. So it's like during those 3 months, they took $24,000 and wired it into the account of the startup that they're going to work for. And it's helped a lot of companies. The other thing that makes us unique is we fill any position for any company anywhere in the world at any level. So it could be C-level, it could be individual contributor, it could be somebody, product, marketing, biz dev, CTO, CFO, you name it, we fill it. And it's fun doing that. In another life, I was a chief scout in the NBA for the San Diego Rockets, who are now the Houston Rockets. I also scouted part-time for the Phoenix Suns. And what I was doing there is I was going to college basketball games and evaluating talent, looking for superstars, people who were head and shoulders above everybody else, and helping and adding them to our team when we could in the draft. And that's what my team does. We're a boutique firm. There are 8 of us, and we're looking for outstanding people to join great startup teams and companies that are further along as well. In addition to People Connect, I run PitchForce, and PitchForce happens every week at 3 o'clock Pacific time. We have companies from all over the country, often companies from outside of the country, pitching to panels of venture capitalists and people who invest in venture like we do today. Next week, we switch that over to earlier stage companies that are looking for their seed or their angel round. And then every 5th week, we have a cannabis pitch force where we have investors who invest both at the seed stage and at the A stage in cannabis, everything that does not touch the plant. So that's what we're about. That's what we do. And I'm going to ask our panelists to introduce themselves. And first up is Scott Russell, who has just an incredible background as a venture capitalist. And congratulations to Scott, recently married on his honeymoon up in Tahoe and just off the slope. So Scott, please introduce yourself, talk a little bit about your background, and then what's important to you when you make an investment, please.
Thanks, Max, and good afternoon, entrepreneurs. I've been a venture capitalist for about 25 years. I co-founded a firm called SoftBank Technology Ventures, and over the course of a couple decades, invested $2.5 billion into startups. I focus mostly on internet startups, software, and have had a great experience investing in many successful companies that you've probably heard of, and some that haven't done so well. But what I focus on is finding entrepreneurs who have good domain knowledge and a passion to change the status quo, and I love to give back, and I love to help them and mentor them and invest occasionally. So looking forward to hearing all the pitches today.
Great. Thanks for being here, Scott. Appreciate it. Next up, Scott's got 25 years experience. F. Lindenbaum has a little over 20, and I've known him for 20 years. A fantastic venture capitalist. And F, please tell us your story, because it's unique, and what you're focused on now at Advanced Ventures.
Oh, thank you, Max. And I, really appreciate the 20-year friendship, and, really PitchForce. It's great to be with all these phenomenal panelists here as well today. So my background, I'm a recovering entrepreneur. So I sat on the other side of the table for the first now third of my career. I used to say half, but things are moving forward here. Started in Silicon Valley when I was too young to know any better. Grew a company, so did all the cycles that just about any entrepreneur would hope for here. Grew a company into 7 countries, 350 people. Got ready to go public in the first .com boom 20 plus years ago. Took an M&A offer instead of going public. And then, it's kind of binary here. When you exit as an entrepreneur in Silicon Valley, you either start your next startup or become an investor. I jokingly say I didn't have any good ideas back then, and so I had no choice but to become an investor. But in reality, I got together with a great group of partners, and we spun up Advanced Ventures in 1999. We've been investing across technology, health, and wellness ever since. We've now invested through 3 successive funds. We've had an exit about every 14 months during the lifespan of the multiple funds there. We just had another little exit about 4 weeks ago, which is always great. Keep it coming. It reminds you why we do this every day. And, we're very active across, some core sectors like digital health, financial technology on the tech side, certainly some of the more exciting AI and other forms of technology, but also into areas like agriculture, a lot of food. If you go to Safeway or your local grocery store, you can pick up some of the companies we've invested in, like plant-based company called Alpha Foods. And that's really a game changer when you're able to not just maybe hold it in your hand in the way of an iPhone, but actually hold it in your hand, then put it in your mouth. It really changes that perspective from an investment. And we're really excited. We're advancing the planet with plant-based proteins as much as we're advancing it with just technology.
Great. Well, thank you. Thank you so much for being here. Our next panelist, Sandy Miller, is CEO of Runway, and Runway is our sponsor, and we're happy to have them as a sponsor. And I was fortunate enough to be a co-founder back in late 2012 of Runway, and just wonderful to see what Sandy has done in moving Runway forward. So Sandy, please tell us a little bit about Runway and about your unique and wonderful background, please.
Sure. So Runway we're based in San Francisco, and we're an innovation company accelerating the success of global innovators and entrepreneurs. And we just last week had reached a really interesting milestone that we're excited about. We had our 50th alumni company be acquired. So over 7 years, over 340 startups that have been members at Runway. We've now just reached our 50th acquisition. So we're super excited about that.
Congratulations.
Yeah. And thank you. Yeah, it's, these companies are really cool. They do amazing things. My background, I've always worked with in sort of technology, innovation, and entrepreneurship. Focused early on in medical devices, co-founded Stanford's medical device program, Stanford Biodesign, and have also designed and run several accelerator programs from many different technologies being developed in many different industries. So I've done that at the Kauffman Foundation, and I've also done it at places like Singularity University, and started and built up their accelerator program. I've also helped a lot of companies raise money, a lot of startups raise money. I've been on the investor side with the Angels Forum, which is now has now become Mighty Capital, which Ed is part of, and he'll tell you about them. And I've also been on the corporate side and really focused on connecting corporates to startups and vice versa. Was part of Accenture's global open innovation team, and now known as Accenture Ventures. So have seen this stuff from a lot of different fun perspectives. And really, it's every time, you know, we do an event like this, and it's truly a privilege to be able to see what startups are developing. And so, because I learn every time from every startup that I meet with. So thanks very much.
Great, thank you for being here. Our next panelist is a distinction of being the only former NFL player who also was a venture capitalist in Eastern Europe for 30 years, is now back here in the Bay Area. And I'd like to welcome back Dan Lynch. Dan?
Max, thank you for the intro. I enjoy being on the PitchForce panel because I get to see a lot of interesting companies. I worked in VC and early stage investing in Prague, Budapest, and Warsaw for many years. And my one thing I noticed is that, you know, a lot of companies come and they misunderstand how to deal with VCs. And so one of the things I try to do is to teach companies how to think about raising capital and understand how investors think, and understand it's not the investors, it's not the VCs who are creating value. We're just allocating capital. And that and it's important for them to do the due diligence on the VC as well in reverse, so they understand who are they partnering with, do they understand the business, are they constructive and helpful, and are they a good partner? And you can call previous companies and they've invested in to talk about that. And also learn from mentors. I enjoy mentoring, but there's a lot of talented people out there who've made a lot of mistakes like I have, and you can learn from them, and it'd be a lot cheaper than the way we learn them. And so I would highly recommend that, since learning never stops, that you get as many brains around you as possible to make sure you have the best chance for success. And I've done a lot of B2B software. I've done tech, telecoms. Our geographic footprint was Estonia to Romania and Bulgaria and everything in between, Poland, Czechoslovakia, Hungary. And I'm glad I'm back in the United States. I'm seeing some great deals here, and I'm now investing through Keiretsu Forum. So that's how the business is structured.
Great, thank you. And you bring up a very good point that a lot of entrepreneurs overlook, which is, you know, when the entrepreneurs are doing due diligence on your company, basically you need to do due diligence on the investors to make sure that there's somebody you want to partner with. Really good point. Next up, happy to welcome back Ed Lamb. Ed is part of Mighty Capital and has a great background. He was early on in a few little companies that you may have heard of, and he's going to tell us about those, although he's modest, but I would like you to mention those.
Thank you. Thanks for having.
Welcome, Ed.
Thank you. Thanks for having me. I think this is the third time I'm doing this. I really enjoy them. My name is Ed Lam. I am a partner at Mighty Capital, and Mighty Capital is a VC firm here in Silicon Valley. We invest in U.S. companies that have demonstrated early growth tractions, and that they're ready to, you know, move their products to the next level. That means we typically invest in Series A, B, or C. I know, you know, from looking at the executive summary briefly, I know some of the companies might be too early for us at this stage, but, you know, let's keep in touch, right? When and when you're ready to raise the next round, we can definitely talk. Anyway, what makes Mighty Capital unique is what the value that we add to a portfolio company is through this exclusive access to an acceleration platform called Products That Can. It's professional organizations of over 300,000 diverse and influential product managers, ranging from entry-level product managers to C-level executives, from Fortune 5,000 companies to startups like the companies that we are about to hear from. There's three things that portfolio companies can benefit from us, and first is this big pool of people is your potential customer, right? As well as your recruiting grant. There's a lot of people looking for jobs. Definitely, with the connections, you can reach out to all these people. And lastly is the for potential exits. Over time, mergers and acquisitions decisions are made at the product C level, right? It's obvious that's, it's probably too early for you to think about at this time exits for some of the companies, but it's extremely valuable when the time comes that that you're looking at exits and to have this access to this groups of executives. A little bit about myself. I am a newcomer compared to the rest of the panels here to the VC world. My background is in the enterprise solution and finance, and during the last 3 decades or so, I was very fortunate to have worked at some of the leading technology companies in their early days. This include Google, Facebook, and most recently Uber. I had the opportunity to lead some of the technology transformations in these companies, especially in the enterprise solutions area. Yeah, I think that's pretty much it about Mighty Capital and a little bit about myself. So I'm looking forward to today's presentation.
Thank you for being here, and you have a wonderful history and background, and we're big fans of SC Mawadi, who heads up Mighty Capital and Products That Count. In fact, People Connect has made some placements for SC at Products That Count. We just placed somebody there recently. Our last panelist is a good friend who I've known through Keiretsu Forum for a number of years. Chris Apfel has a number of letters after his name: MD, PhD, MBA. That's a lot of letters. He's a very bright, very accomplished doctor and startup entrepreneur. Chris, please tell us a little bit about yourself.
Well, you're way too kind. The reason for the many letters is I need a lot of training to get through life. So after each degree I got, the professors looked at me and said, no, you're not fit for it yet. So I had to accumulate a couple of letters. The JD is still missing. I apologize for that. But I will do my best after I've finished Medic, which is a company that I founded a couple of years ago where I'm the CEO. But independent of that, I'm here more on an investor role. I'm the chair of the Life Science Committee at the Keiretsu Forum, and I'm enjoying the forum because of the rigorous due diligence that we do there in order to really understand what are good investment opportunities. And that's actually where we form teams on the due diligence, where we work collectively together in order to get a good impression. And when we look under the hood, is this company worthwhile, and how is the interaction with the entrepreneur? And there is good evidence that due diligence is critically important to make the right investment decisions. That really has a big impact on your ROI because it gives you a sense of which company is good and to invest. So going deep and getting an understanding and learning from the many other talents that we have at the Keiretsu Forum is actually what I've done in the last couple of years as well. I've made probably over 20 investments now, or getting close to 20 investments, primarily in the life science space. So they need to be investments that make sense, make an impact on patients' lives, and at the same time, give a reasonable ROI to the early stage investors that adjust for the risk, for tremendous risk we are actually taking when we are investing in early stage companies.
Great, thank you. Thanks for being here. So we're going to start the show. And again, we've got 6 companies that are going to be presenting. They'll do a 1-minute elevator pitch, and immediately thereafter, the panel will vote. We're going to start out and welcome back Graham Speak with Bankvault. Graham has been here before, and glad that he's joining us today. We are ready when you are, Mr. Speak.
Right, okay, so everything blanked out for a second there. Okay, so Bankvault has been pioneering web cybersecurity since 2015. We have a prominent shareholder in Whitfield Diffie, who is the father of internet encryption that we all use today. We have 6 patents filed worldwide, 5 products in market, and the last is a product which we just released called MasterKey. Bankvault MasterKey is a silver bullet for web security. The unique clientless architecture means that there is no software for the user to install or configure. So this becomes a plug-and-play web security solution that then creates passwordless web authentication. Overnight, no risk, with no change management. The analysts predict that 90% of mid-sized enterprises will try to adopt some sort of passwordless technology in the next 2 years. But these deployments typically take months. The scarcest resource is the technical manpower to do it. And we've solved that problem. So bank vault master key can be deployed in hours. This makes it 10 to 100 times faster than other solutions because we don't make any changes to backend infrastructure.
You're out of time. You're out of time. You're at 1 minute and 3. Okay. You folks ready to vote? 1, 2, 3. We got 3, 3, and 3 is 9, and 8 is 17, and 3 is 20. Very nice score. Okay. Next up is Mike Neal with Decision Next. Welcome, Mike. Mike is calling in from Boston. You're muted, Mike. Mike, you're muted.
Okay. Am I still muted?
No, you're live and you can begin whenever you're ready.
Great. Thank you. So we are Decision Next. We're a highly focused SaaS analytics company that's working in 2 verticals, food and ag and natural resources, which is mining. These are both commodity industries because we help commodity buyers and sellers to simulate future prices and to make better decisions based on those simulations. The benefits from doing this are really big. They're 1% of revenues at minimum, and they can be a multiple of that. This could be surprising because commodity companies, we all learned in school, are price takers and the margins are thin. That, I'm here to tell you, is just in the textbooks. There is big opportunity in commodities. There's not much direct competition yet. It's an underserved space, which creates a serious opportunity. And the team has done this before. We've started and exited 3 other companies before this one. Avant, bought by Manhattan Associates in 2005. Demantech, we IPO'd in 2007. It was then part of IBM.
Mike, your minute is up. Thank you.
Thank you.
Okay. You guys ready to vote? 1, 2, 3. You've got 4, 4, and 5. That's 8 and 5 is 13, and 7 is 23. Very good score. Okay, congratulations, Mike. Next up is Dave Auger with My Fungi. My Fungi, My Fungi. He's here from Canada. Welcome back, Dave. There you are. Okay. Hey, Dave, whenever you're ready, we're ready.
Awesome. Well, everybody, thank you. My name is Dave Auger, and my company is My Fungi, and we grow mushrooms. We have a small, strong team from Calgary, Alberta, in Canada, with backgrounds in food, pharmaceuticals, and cannabis, as well as controlled substances. Our facility right now is producing revenue. We did $1,200 in sales in our first month and are going to do $17,000 for January. We are currently doing a $2.4 million raise with the aspirations to take our company public. We're growing 6 different types of mushrooms right now, but we do have aspirations to enter the psychedelic industry. We have a very strong team with tremendous background. And sorry, I got a little nervous and run out of gas.
Okay. All right. Thank you. You guys ready to vote? 1, 2, 3. We've got 2, 2, 2. That's 6, and 3 is 9. And Scott's got 3's 12, and 5 from F is 17.
Appreciate the 5, F.
Hey, I'm an investor all across your space, from mushrooms to cannabis. So we're all in.
Awesome.
All
You can
right.
reach me at dave@myfungi.ca. Thanks, guys.
We have the
There you go.
highest value one in the world.
Thank you, Dave. All right. Next up from Rochester, New York, we welcome Joe Kifari with Enlighten. Welcome, Joe.
You're on mute.
You're muted, Joe. Joe, you're muted.
Sorry for the technical difficulty to start off with. I'm Joe Kifari. I'm the CEO of Enlighten Technologies. We're a secure platform for document storage, vaulting, and we combine it with audio and video collaboration. Think of us as the secure version of Zoom and DocuSign you've been waiting for. We're completely web-based. no software to download on your machine. And we've also now are providing secure signature services with ID verification. Our management team averages over 25 years of experience in legal, telecom, and technology. We've generated over $8 million since the inception of the company for our secure products, and over 17 million has been invested into the R&D of this company. Customers are publishers like Macmillan, Simon & Schuster. We're doing a $5 million raise in order to expand beyond the legal vertical that we currently have. We're expected to see 48 billion in market size by 2024. Our forecast is for 28 million in revenue, 20 million in EBITDA in the next 36 months. An exit could occur even before then to a strategic or potentially a competitor looking to bolster up their security. We're raising 5 million in the safe.
Thank you. Okay. Guys ready to vote? 1, 2, 3. Okay, we've got down below, we've got 7 and 3 is 10 and 3 is 13 and 6 is 19. Thanks, Joe. Okay, next up is Carolyn. Carolyn Urena with Sisu Global. Welcome, Carolyn.
Thank you. 100 million units of blood each year are missing, and blood costs over $100 per blood bag in the US and in emerging markets. When a clinician reaches for that blood bag, it isn't there. But at Sisu Global, we enable clinicians to use a patient's own blood to save them during surgery by capturing blood from internal bleeding, filtering it, and giving it back to the same patient in the same surgery with our patented device, Hemofuse. Hemofuse is sold in Africa with over $947,000 of revenue and established great partnerships. Hemofuse is available in over 20 hospitals where it's been used to salvage a patient's own blood where it saved them. Our C-suite has spent 40 years combined leading emerging market companies. Our advisory board includes leading global experts in auto transfusion, and our board has deep ties to the US military. The COVID-19 pandemic has increased the severity of the global blood shortage, and the time is now to scale with a 5 million Series A to bring Hemofuse into new markets in Africa and Asia, as well as entry into the US military.
Thank you. Okay, you guys ready to vote? 1, 2, 3. We got a 4, we got a 3 is 7, and 5 is 12, and 6 is 18, and 4, 22. Very nice score, Carolyn. Okay, we've got one last presenter, who's Josh Mcclure with Maxwell Biosciences. Josh started the morning presenting to the Keiretsu Forum, and now he's joining us, and he had a pitch in between, so he's on the pitch, sir. Welcome, Josh.
Thanks for having me.
Sure.
Maxwell Biosciences is developing a completely new class of drugs. Our small molecule drugs mimic human immune system molecules, only with vastly improved pharmacological properties. I have over 18 years of experience as a technology CEO with 5 years of very specific biotech CEO experience. Our team can, in fact, program our drugs to target a broad spectrum of pathogens or target specific classes of pathogens. The peer-reviewed evidence for this is well published in dozens of top journals like Nature Communications and a variety of other top journals. These peer-reviewed articles show the drugs effectively address antibiotic-resistant bacteria, difficult fungal infections, limited types of cancer, and importantly, viruses. In fact, our first product is a tissue-safe viricide, which destroys viruses, including the coronavirus family, hepatitis family, and herpes family of viruses. Unlike our antiviral competitors like acyclovir and Tamiflu, our drug completely destroys a virus. This image, we have images that prove our mechanism of action.
You're out of time. Thank you. Okay, guys, ready to vote for the last time in the first round? We've got a 4, 4, and 5. That's 13 and 6. 13 and 6 is 19, and 4 is 23. Okay, so I think I've got these scores right. Adrian, you can let me know if I do. I've got Bank Vault with 20, Decision Next with 23, Enlighten with 19, Sisu with 22, and Maxwell Biosciences with 23.
Right.
If that's correct, then those companies will all advance to the next round, and we've got winners in the first round. So the 1 minute round was a tie for first between Decision Next and Maxwell Biosciences. So congratulations to those two companies. We're now going to switch to PowerPoints, 4-minute PowerPoints, 4 minutes of Q&A, and then about 8 or 10 minutes of non-rebuttal feedback. And a word specifically to the presenters. You know, we actually had it happen here a couple of times, and it always happens. Someone has the mute button on when they don't want it on. Well, this is a reverse. When we get to the end, to the last portion, when we're doing feedback, we call it non-rebuttal feedback. So what I'm going to ask you to do is turn your mute on, because you can't talk anyway. And if you were trying to, we don't want to hear you. So first up, let's welcome back Graham Speak with Bank Vault.
Okay, so can you hear me now?
Yes.
Yep, great. All right.
Want to bring your deck up, please.
Oh, sorry. Yep. Thought I was shared.
If you can have yours ready, that will be helpful.
Is my screen sharing? I'm pressing the button.
Now it looks like it's getting ready to. Now there you are. Good.
Okay, great.
Okay.
All right. So the Bank Vault has been evolving web security since 2015. We have 6 patents filed worldwide, 5 products in market. We've just released Bank Vault Master Key, which is a silver bullet for web security. It creates passwordless authentication. As a team, my core team have been together for 9 years. We are domain experts, and our prominent shareholder is Whitfield Diffie, who is the father of internet encryption, as we know it today. The issue we're addressing is endpoint devices that have been compromised. It's identity theft, where hackers are trying to actually collect user credentials to online services. When a user sees the asterisks in their password field, this is simply a mask for the people sitting around them. Any software in that browser intercepts that as clear text instantly. What that means is if you're using a password manager, when they load your encrypted key password into the web form, it's no longer encrypted, it's clear text, and they actually expose your credentials. So the industry knows this, and to date, the only solution has been 2-factor authentication, something that you have as well as something that you know. It's a solid idea. It's clumsy, it's kind of a last resort because it is a bit of a nuisance, and it's not infallible. If I've got your browser, I've only got to change the bank account number behind the screen, and you authorize it with your fob or your Google Authenticate. Our solution, sorry, am I still there?
Yes.
Okay. Our solution is a clientless technology, meaning that there is nothing for a user to install, and it's web server controlled. So you can deploy this to 1 million users literally instantly. We harness the user's mobile, and we have 3 benefits that this creates. 3 technologies this creates. One is an encrypted keyboard, which is an illusion on the user's phone. We create passwordless authentication. We create multi-factor authentication in a way that's completely invisible to the user. So as I said, we harness the user's mobile browser. What we do is we can project an image. It looks like a keyboard. It's just an illusion. We're sampling and setting up cells on the screen that can only be interpreted by the web server that created it. So we can when you type ABC123, these are not actually characters. These are simply cell references. And we can actually store this online. We can reconstitute this data as information later, but only inside the original web server that set it up. And when that was triangulated with the user's mobile and also with the user proving proof of presence. What that means is when the user comes along and opens the camera on their phone, Workstation simply wakes up and logs in. There's nothing installed on the devices and there's no keyboard. On a mobile or tablet, it recognizes the user straight away and simply logs them in. We can layer another layer of security on this, which is proof of presence, where the user identifies themselves with perhaps a biometric or a screen pattern. The market is exploding for this. Analysts are predicting that in the next 2 years, 90% of mid-market and 60% of global enterprises will try to adopt this. But these projects are large. They take weeks and months, and the scarcest resource is the technical manpower. This is what we've solved. Our solution can be deployed literally in hours. It's, as I said, 10 to 100 times faster than competitors. And that's because we are making no changes to backend infrastructure. There is no client software to download and configure, and therefore no user setup. That means there is no change management project. You can do this risk-free. There's no technology risk or security risk. We've raised $4 million to this point. We're raising another $2 million as a super seed round right now to basically build sales and marketing. To be in the market with the competitors, we're looking at a Series A later this year. Everyone's cybersecurity solution is actually solid. The differentiator is actually in the ease of implementation, and this is where we kill it. We can start with a freemium model. Typically in our market, the prices are ranging from $2 to $5 per user a month, and we can do any price. Our clear advantage is the implementation. The market is exploding. This is a huge market opportunity. Our go-to-market is through partners, but also direct marketing online. As I said, this could be a self-service portal. It's a really low-touch sale process. The numbers here are aspirational. We want to validate this. If we knew that these were going to be the numbers, we'd be serious.
Graham, you're out of time. Your 4 minutes are up. Tell me about the raise, please.
So raising 2 million as a super seed round now to do a Series A later this year.
And is it convertible note? And if so, what's the cap?
The 2 million right now is for equity. Pre-money valuation 16 million.
16?
16.
Got it. Okay, thank you. Questions? Yes, F and then Dan.
Great, thanks, Graham. So can you speak to the sales and adoption curve? So how long it takes from the time you make contact to the time you complete a sale and the time you complete, implementation. Next thing is if you could speak to, your rollout strategy that appears to be far too little money to actually go out and execute on. And then finally, just speak to, current cash in bank.
Yep. So the company is being supported by existing shareholders until we raise the round. We want to go for a large Series A. What I'm looking at right now is simply just the money to get us up to the next run, based here in the US. The sales typically, the touch points are almost insignificant. This literally can be self-service. The time depends on how long an organization takes. So our largest prospect right now, we're on to our 4th or 5th meeting with them, and that's taking like 4 months. Our shortest sales cycle has literally been one conversation.
Graham, I didn't hear the name of the company.
The one I quoted them was called Paychecks.
Got it. Thank you.
Paychecks.
Okay.
Yep.
Yeah. And then current sort of revenue, per customer.
The revenue will be based on the actual user count. The revenue in the market price tends to be around $2 to $3 to $5 per user per month. We can actually open up a larger market. So this is like typically for an enterprise staff person, but we can do external visitors to a website, and we can do that at any price. So yeah, we have a number of ways that we can actually spin this. We actually open up a much larger market of smaller enterprises.
Thank you very much. I appreciate it.
Yeah.
Okay, Graham, so there is no revenue yet. Is that correct? Your pre-revenue?
No, we have revenue now. It's just starting right now. It's on this product. It's small. On the previous products, we were at about $250,000, but this is the future. This one. Yeah.
Shorter answers if you can. Dan?
Yeah, my questions are very similar. How long is the sales cycle, and how are you going to do customer penetration? My first instinct is that you're kind of late to the game here in terms of cybersecurity. A lot of work has been done already, and I guess you're not. Are you displacing other existing technology? What does the decision curve look like for your customers? Who's the contact point? How do they make how are they making a decision? What are the rejections have you heard?
So Matt, look, I might reference a competitor, Beyond Identity, came out of stealth 8 months ago, raised in the last 8 months $105 million for this market. So the market is very, very real. In comparison, we would be 10 to 100 times simpler to deploy than they are. The sales is really about marketing through channel partners. Our sales right now are simply coming through when I post things on LinkedIn. The inquiries come. If you want to be HIPAA compliant within a medical center or a hospital group, you need to be doing things about this right now. There's a strong drive for passwordless. Passwords are a pain in the neck for everybody. And this is stronger security as well as being more convenient. It's a no-brainer. And you've got to ask us in 2 hours.
Graham, shorter answers, please. One last question from Chris.
Do you employ blockchain technologies to secure communication? Is there a need for it?
We can apply this to blockchain cryptocurrency. We can store we actually have created an enabling technology. We can store your private key online in a way that can never be deciphered.
My question was not whether you can apply it to cryptocurrency. My question is, will you need blockchain technology, or can you leverage, or do you leverage this to ensure security?
No.
It's a yes or no. A yes or no.
Thank you.
What's your answer, Graham?
No, I said no.
Okay, thank you. Ed, did you have a question? I'm sorry. Ed, did you have a question?
Yes, I do. More of a comment maybe. Nowadays, I don't even use websites. All the applications or all the services I use, they have an app, and I use facial recognition. So how does your product help me?
The world is moving away from installed apps, particularly when you go to 5G. You'll be finding web services are so much simpler and they're deployed instantly. So a developer would rather deploy through a web service than have to make an app. So that's what we see as the future. It's a really big market. It's growing.
Okay.
Okay, Graham, if you would put the mute button on, we're going to start our feedback now. It'll be Scott, F, Sandy, Dan, Ed, and we'll finish up with Chris in this round. Scott, you're first, please.
Hi, Graham. I heard your pitch before. I think we talked on before. As I said, I like the space. I've always liked the space. That's the feedback I gave you before, and your ease of installment is good. But the challenge you're facing now, which you know well, is that first customer, that reference customer, and without it, you're going to have a lot of challenge. I mean, my only advice is I've been invested in two-factor authentication before. Is the first customer sale is a very personal sale. It does take a long time. Generally, my past portfolio companies focused on financial services companies, which have a lot of money and obviously a lot of problems with security. But all I can say is it's a very personal sale. It sometimes takes a long time, and best of luck. I hope you can do it.
Thanks, Scott. F?
Yeah, so Graham, so the first thing is, I have, as well as Scott, I think we were probably together when we heard you last time. So I would really just honestly take a step back. Your valuation is not in line with your current state of affairs. I get it. You've got great tech. The reason why this other company has raised so much money is because they've probably thought through and or modeled many of the other things that I've asked you, right? This is not a best technology wins the race story. The valley here and in the technology world is littered with the best technology. That does not win. The best execution wins. And so the questions I was really asking you are things that any investor beyond your internal group of investors, which I think is a very bad premise that people continue to fund companies like that. You should be able to answer. You need to model what it takes from the time a lead comes in the door to a time a lead close. That helps you, model the sales cycle element. If you don't have someone on board, go talk to Max, go hire someone, bring them on board to help you understand that business model. To my colleague Scott's, approach, boil the ocean is never a way to go. You need to dig into particular categories where you can put time and effort and build momentum to go forward. And then the final piece is, you really need to rethink valuation. At the end of the day, when you're getting basically money from existing investors and you're doing things like that, there's fundamentally something wrong as we view it. When we view it through the lens, if it's nursing it along, why is it nursing along? It just throws up flags. My general sense would be, roll back the valuation, come up with a reasonable, equity round, get that equity round done, get some of this, true customer revenue traction data points that then allows you to be that $100 million company if your technology is great. But it's all about execution. And when you tell me you've been around a long time and you tell me you don't have any revenue and you don't know what it takes to sell your product, you got to go see Max, you got to bring in some people, and you got to retool the valuation. Sorry to be a little pointed.
Thank you, F. Great advice. Sandy?
So Graham, I also have seen this before. And one thing I want to applaud you on is I think you explained how this worked really, really well. And that was, I think you've spent some time. It's fun to see how your presentation has evolved. I do think, I think building on F's point, one of the other things that, your valuation, just the reality of that is there's a market right now. Valuations have gone down in general. So you just have to be mindful of that in this context as you're going out for a priced round. I think you have an opportunity to speak to to tell a little bit more about your investors, and you could have done that with some to logos, to if you have investors, prior investors of note, and just making that point a little bit more easily, more efficiently about, hey, these folks are still in with us, and and that I think can help from a de-risking standpoint. I also wondered about customer acquisition. I actually have some thoughts on that, and I think the 5G point that you made verbally is good. I think you may want to have that visually represented in your deck so that you can, you can speak to what 5G means from an opportunity standpoint, because that's something that might perk up some ears for you. But great, nice job overall, really nice job.
Thanks, Andy. Dan?
Yeah, I like the presentation. I agree with the other points that were said. I think to understand the investors is that they look at the technology, look at the business strategy and the stage of investment, but they invest in the team. And so really, especially at this early stage, is highlighting the horsepower you have behind you. Who else is voting with their careers on this company that believes in it as much as you do, and what is their background, and also how much external capital has gone in the company to date, especially from the founders. You've got your own skin in the game. That's a good validating point for third parties. And because we're right now, the investors sitting back and going, okay, I'm trying to figure out what do the mosaic tiles look like in terms of customer traction, customer adoption, et cetera, in order to get a picture of what execution risks you have remaining. And you're at a kind of vulnerable point right now where you've got to cross a chasm. I do want to kind of throw you something that I don't know if you picked up specialized VCs in the sector. I happen to know the guys at Evolution Equity, which is a cybersecurity fund based in New York. I can make an intro there if you'd like. They specialize in what you do, and they also put together funding consortiums. If the ticket is large. But I think that you just take a step back and look at where who you are, where you are, and it runs back to the issues on valuation, et cetera. Because when you grow, you're going to have to go big, and I think that that's going to mean dilution. And so, but you need to get the people on there so the pie can be as big as possible.
Thanks, Dan, and thanks for the offer. We'll put you and Graham together so you can give me information on the Evolution guys in New York. Ed, you're up.
I think you have gotten a lot of great advice from the panels here. I don't have anything meaningful to add to it, but I do have one observation. From say a potential end user standpoint. I agree with you with the 5G coming out. Maybe the technology is shift. People are not building apps anymore, but if you can build similar integration by using biometric or facial recognition, that would be great, because I never remember my password. I hate it when I have to enter a password and you were saying it projects a keyboard and user have to enter something. That is not going to work for me as a potential end user.
Thanks, Ed. Chris?
Yes. Well, first of all, I agree with everything that was said. And of course, all the criticism is valid, because in 4 minutes, you cannot present all the relevant information. So we should also keep that in mind. My space is really life science space. So this is not fully my expertise. My gut feeling here is the following. Cybersecurity is a real big issue. We are under constant threat and being constantly attacked from mainly outside the US. And so cybersecurity is a growing field, is a very important field. Now, the big question is, how much safer and more convenient is the solution? It looks to me like your advantage is a much less expensive implementation, so that you can scale much better. great point. In this regard, I'm interested to learn more about it. What I do not know is, are there other loopholes and security leaks? And that would require for me to take a closer look how it works, get a demo, get a sense of what's really the advantage, competitive advantage over what's currently out there in order to understand whether this could be the winning game, assuming that you have sufficient IP protection that actually will give you the cutting edge in the future.
Thanks, Chris. We're going to vote again on the count of three, please. 1, 2, 3. You've got 3 and 3, 6, 8 and 7 is 15, and 3 is 18. Thanks, Graham. Okay, next up, let's welcome Mike Neal with Decision Next. If you want to share your screen, please.
Okay, do you see my screen?
Yes, yep, we're ready when you are.
Great, thank you. Thanks to all of you for the time. I'd like to start by expanding on a few of the points I made in my 1 minute, and then if we have time, I'd like to go into 1 or 2 case studies. So I had mentioned the 2 verticals that we're focused on, food and ag and natural resources. We're going there because the opportunity seems biggest there, and the founding team's backgrounds are in those 2 spaces, but there are many others to go to over time. My experience is that you need to focus, that if we tried to be a horizontal platform to approach all these verticals at once, we would probably not do very well. You need to be able to speak their language and demonstrate expertise to be able to help companies with these critical decisions. So that's why we've started where we are, but we will ultimately go to oil and gas, chemicals, forest products, other commodity disassembly businesses. Disassembly is an important point, which we can talk about later if there's time. So what makes us different? We've innovated in 2 main areas. One is the human-machine interface. Specifically, we've learned that having the very best machine learning algorithms in this space is just table stakes. So somebody said earlier that execution matters. Execution matters a ton, but the other thing that matters is giving the human expert credit for their expertise and finding a way to integrate that into the solution. It's pretty arrogant to take a machine learning approach in and try to displace humans in these spaces. And so we explicitly have built technology around allowing a human to interact with a machine multiple different ways, whatever way works best for the specific person. And in fact, we have several patents pending in that stuff. I said the benefits are big earlier. 1% of revenues is sort of expected. There are other benefits, soft benefits. One is institutionalization of corporate knowledge. We allow an expert who has 2 decades of experience to impart their cumulative experience into the machine to help others go through an apprenticeship much quicker. This, in fact, was why Cargill started working with us in the past. It was specifically to avoid the risk of technology or expertise leakage. I said earlier there's no competition. There's no direct competition, but the more useful definition in my experience of competition is who's competing for the same budget dollars. If we talk about that definition, it's consulting firms. They are using a lot of the same words. They will promise to build technology. It's usually pretty easy to compete against them because we have the technology, but that's our real competition. Also, internal teams and inertia can be considered competition. Let's see, lessons learned. So I mentioned that we had previous exits and all of these had been analytics companies. We learned stuff at every one of them. All of these lessons have been sort of accumulated and built into Decision Next. One of them is about the human machine interface, which I've talked about. A second one is the criticality of quantifying risk. If our machine learning algorithm is predicting the price of sirloin tips will be $5.20 in 2 months, what really matters is—
Mike, you're out of time. You're 4 minutes up. I just wanted to be clear. You did say you just had one slide. Is that correct?
I haven't showed any slides. I got so carried away. I don't think we needed any slides. This was sort of the major points.
Okay. And did you go over our presenter guidelines?
Yeah, I think I did. Yep. Yeah. So
All right.
we've covered most of what I wanted to cover. I did have some case studies that I could have.
You didn't cover much of what we wanted you to cover, but let me switch to questions. Scott, please.
Mike, I think you referenced the company Avant. Did you work for Avant?
Yeah, I was called a co-founder at Avant. We use the term a little loosely.
You were co-founder with Rob Freeland?
No, so we bought that Avant and took over their name. We were Nonstop Logistics, a Kleiner-funded company, and we bought their company in Atlanta and took their name. And it was that combined company that was sold to Manhattan Associates.
Oh, okay. Because I was the original investor in the old Avant.
Got it.
Okay. So you bought my company. All right.
We liked their name better.
Okay. F, I think you had your hand up.
Yeah. So coming from a food and ag investor perspective, I felt like I had a really great coffee kind of table, if you will, coffee table book conversation. I have no idea other than that, basic reference to Cargill, what you do. So I think to Max's point, you probably need to explain it. You need to explain more of it so that I'd actually want to spend time talking to you. Next question is, since I don't know what you actually do, why do you think that a platform versus a professional service model has not been employed over the last, 50 years in food and ag where you would like to be?
A couple of reasons. One is it's very hard to do. Just combining all of the different components of our value add into a single system is technologically very, very difficult, which creates a moat around us. Two is it's the SaaS model, which was only really possible in the last 15 years, is central to how this value add is created. It would be so much harder to have to deliver the science models.
Thank you so much. I really appreciate it. Thank you.
And Mike, to F's first question, what do you do? It's unclear. It's unclear to, probably more than just F and me is my guess.
We simulate market prices. So we simulate what the price of iron ore will be next month, the month after that. And we help people who place trades, who buy and sell iron ore, to make buy and sell decisions based on that simulation.
Thank you. Who had a question? Dan, did you have your hand up or?
No, I didn't, but it just jumped off the page. What do you guys do? We all saw that gap in the presentation. So,
okay. Any other questions before we switch to feedback? Yes, Ed, please. Ed, you're muted.
Sorry, just curiosity. What do these traders do right now, or do they use right now when they're not using your AI solution?
They buy forecasts for the commodity that come out in newsletters. They buy syndicated data sets that they use to build internal forecasts. There's a lot of forecasting going on. There's very little software to address this problem more completely.
Thank you.
Okay. If you could mute yourself now, please, Mike. We're going to switch to the rebuttal feedback, and the order will be F, Sandy, Dan, Ed, Chris, and we'll end up with Scott. F, you're up first, please.
Yeah, sorry. I don't mean to pile on here, Mike, and end up being like the bad VC of the day for anybody here. But the short version is I actually sit on the board with pretty much every one of your potential customers in the food and ag space: Bunge, Continental Grain, Kellogg's, et cetera, on one board or another. there's a reason why they don't use open market software. Each one of them has a very unique prospect in this space, whether, you know, and very few of them buy newsletters. Anybody who could afford to actually buy your software actually uses software already. They build it themselves. They all have their own unique, specific analytical models. There's a reason why the consulting business works. That being said, you know, I think your concept is very valid in a lot of other markets, just not food and agriculture. I will also warn you, as a guy who maybe has or has not done food and ag for a long time, it's a very, very long sales cycle. You know, the typical exit trajectory in the food and ag space is a minimum of 7 to 10 years, which is, from a guy who's experienced and successful in the software world, you know, is very challenging. And you have to have the ability to both raise capital and reach milestones and generate, you know, really explosive revenue for a long period of time to reach exit. So my recommendation to you is, you know, don't look at food and ag. Go, you know, some of the other categories you said make a lot of difference. I would immediately point you to the hedge fund industry. These guys have unlimited resources and can make the value and the data that you have actionable and valuable immediately.
Thanks, Steph. Sandy?
Yeah, I'm going to sort of make some comments. I actually was on a pitch event this morning, and another entrepreneur sort of did the same thing you did. Like you, he is incredibly articulate and a great speaker. He didn't have the track record, the incredible track record that you do, but he made the same mistake. These are events where you have to communicate a ton of information in 4 minutes. And while you're very comfortable going off the cuff and talking through things, it actually is not an effective way to communicate without visuals, because people really take in information in different ways. And so you just cut off one of the biggest ways that people take in information, which is visually. And so there's a lot of stuff that you know, it's a missed opportunity. So there's a lot of stuff about your company and what you're doing, despite, you know, I mean, I listened very, very closely to every word you said, and there was a lot that wasn't there that I'm sure was on your slides. So I just want to encourage not only you, because there are times when you just have to get up and speak, you know, speak in the way you did, but this is not one of those formats. It's good to have that ability in case, you know, the tech goes wrong. But I think, unfortunately, it's a missed opportunity in terms of really getting your company out there as broadly as possible.
Thanks, Sandy. Dan?
That's a good comment, Sandy. In terms of the forum, I mean, the good things you did, I thought, you know, you really focused on UI, UX experience. I think that's one of the things that a lot of software companies don't invest enough in, and that's really what drives penetration. I think you said there's not much competition, which is a big red flag for an investor, because that means not much opportunity. You didn't lay out the, you know, here's the problem, here's our, you know, addressable market. This is who we're displacing in the market and why we're better. As F mentioned, what they're existing using now, and you know, why you're going to gain market share, you know, over the existing solutions. I think that would be, you know, make a very logical step-by-step sequence of how you're going to gain market share and how you can do customer penetration. That's a I mean, there's good there. I think that they just need to brush it up a bit more.
Thank you, Dan. I'm sorry, Ed.
I don't have much to add. I just because the confusions. I didn't quite get, you know, what your product or services is, but from what I can derive, it sounds like your product leverages artificial intelligence in combination with human intelligence, if I'm correct. If that's the case, I would like to know what qualification do you have to add that a human intelligence? What are your team? Who are your teams, and what are their qualifications, so that, you know, we can you know, trust that your model is better than the existing model that you just described.
Thank you. Chris.
I would strongly agree with Sandy. It's a missed opportunity not to show any slides because I actually want to see data. I want to see how it works. I want to see results. I want to see sensitivity, specificity, positive predictive values, IRRs, or whatever. But I want to see the graphs and the data in a format. Otherwise, it's really difficult for me to grasp and to see whether it has an impact. I think that's my main comment.
Thank you. Scott?
As I said, 20 years ago, I invested in Avant, a price optimization company, long before machine learning ever was around. And we were focused on the retail sector, as you probably know. And, we made some traction. I think I personally invested $6 million at that time. Price optimization's, a good area to focus on. I wish you a lot of luck, Mike. I think you've got a lot of other good feedback on your presentation.
Thank you. F?
Yeah, so, I think I probably gave a little too much anecdotal early on, but I'll just make it clear. I mean, to a degree, I think you insult us, and whether you decide that's because you're smarter, richer, faster, whatever. I'm just going to take that tack because there is a format here. If you don't want to play the game, if you want to bring a hockey stick to the tennis match, hey, that's your gig. Just there are a lot of other companies that worked real hard to get into this and get a shot to talk to all of us today. And I'm annoyed. I was an entrepreneur. I had a huge exit, probably bigger than yours. But yet I understand at the end of the day that my time is valuable, your time is valuable, and all my colleagues are. And you took the time away from another entrepreneur that's working super hard. And that bums me out as a former entrepreneur.
Thank you. Okay, you guys ready to vote? 1, 2, 3. We got 2, 3, 5, 6, 7, 8, 9, 10, 12, I believe is the score. Okay, and just so everybody knows, and we work with all the entrepreneurs that find a half hour to work with us, and we've got 8 points that we want them to cover in the 4 minutes it can be covered. And we'd love to have you back at some time in the future, Mike, but you got to play the game the way it's supposed to be played. When I was in the military, guys tried to cut corners, and we used to say, you can't beat the system. You can't beat the system. And this was the first time we've ever had anybody pitch with just one slide, and hopefully it'll be the last. Okay, now let's welcome back Joe Kifari with Enlighten from Rochester, New York. Welcome, Joe. And if you want to share your deck, please. Great, we're ready. Yes.
So as a hockey player and a tennis player, I try to bring the appropriate equipment to each of those. So I appreciate that last comment. So Enlighten's been around for a number of years and has been trying to perfect the combination of what Zoom and DocuSign have. And it's really designed by lawyers for the legal profession. Last year, over 167 million were hacked, $8 billion were lost. So it's a significant market. So jumping into our existing products, we've been around a little while. We focus on the legal community. Legalconference.com and secureclientfile.com are being used today. They've been used for a while. They provide secure communications, secure document collaboration, and secure document transfer, which in today's day and age with things like real estate transactions going on at a feverish pace, you need to have the security between the parties. It's absolutely critical. Somebody made a comment a little earlier ago about the team. So we're not the youngest team out there. I've been in the business for 30 years in TMT as a CEO, COO, and CMO. Our founders, our attorneys, our general counsel, 40 years in the legal profession, former FBI special agent, which is a really cool job and tells great stories. And our EVP of technology development, an attorney for 23 years of development in legal tech. So we built a really strong core foundation. Somebody asked the question earlier, our original investors have been in from day one and will continue going forward. That's super important to us, that we're not changing the business, we're expanding the business. We're moving into different verticals. The verticals we're looking for to pull customers who are right now super dissatisfied with Zoom and Teams. They're not secure and they've had a poor customer experience. These range from law firms, real estate transactions, healthcare agencies, entertainment. Scripts are being stolen on a feverish pace, which amazes me. Insurance agencies, financial institutions, and the new way of buying cars online. So what do? We secure the unsecure. We secure the transfer documents. Many of the cloud-based services are unsecure. Most are difficult and kludgy to use. The UIs aren't great. And most require downloads. And all that means the security is compromised. So our current traction, we've done $8 million. Since inception, we have paying customers today. It's a huge market. You know, Zoom has a market cap. I don't know it to literally to the second, but Zoom was over 110 yesterday, billion in market cap. DocuSign's almost 50 billion. So our current products, we have the newest product, the dissolvable document service. Think of it as Snapchat for contracts. We set a timer on it, the contract dissolves. It's nowhere to be found. You can't have it misinterpreted or changed in any way. We also added secure signature capture with digital video, which means when you sign a document using Enlighten, that it actually captures the person who's signing it via video, and that gets added to the file. And then we're now adding immersive audio for clear calls with transcription, which means today, this call that we're on right now is a half duplex call. We can't talk over one another. With our service, you'll be able to have crystal clear conversations with very, very accurate transcription services. It's a big market. The enterprise collaboration market alone today is 31 billion, predicted at over 48 billion in the next few years. It had a 9.2% CAGR pre-COVID. Last year, those two companies I mentioned grew over 100%. We don't consider ourselves a work from home play. We are a work from anywhere play. And the increasing use of mobile devices, we are a logical partner for companies like Samsung and their Knox service on their phone. We make money using annual platforms and subscriptions, so we have very sticky services. We private label these so telecom carriers can offer it to their customers under their brands. We use it through associations like the bar associations. In the future, will be embedded on those mobile devices inside the phone. So our revenue model, we're projected 3.7 growing to 28.6.
Joe, you're out of time. Joe, excuse me, you're out of time. So we're going to switch to Q&A. And yes, I think F had his hand up first, and then Scott.
No, you know, I talk too much. Let Scott go, or someone else first.
Okay. Go ahead, Scott.
Joe, your presentation intrigues me. I guess the first thing is customers. Yep. You mentioned revenue this year, but do you have customers? If so, who are they? What stage of deployment are you in?
Yes, so we have customers like Simon & Schuster and Macmillan, publishers that use the secure document service to on a regular basis. Customers' costs, one of the questions earlier was, we have services that range from small firms that'll pay $350 to larger ones that will be a couple $1,000, depending on the number of seats they use.
And just can you, as a case study, Simon & Schuster is a great reference customer. Give me the economics of that deal.
I can't specifically disclose it, but they pay an annual fee to have a number of seats that they use our service for.
Okay.
Okay, Sandy and then Dan.
Quick question. We use, HelloSign and, obviously Adobe. Can you just help me understand in terms of, whether from customer or, target acquirer sort of thing, where do you fit in that universe?
So if you look at the potential acquirers of a company like ours, a Zoom, DocuSign, Adobe, or the combination of Slack, Salesforce, none of them have the secure document portion of it. So it's all web-based, as one of the previous presenters was talking about. The future is going to be web-based as opposed to application-based. There'll be no software that's used. This allows us to plug into, if Zoom wanted to use us just for secure documents, they could. If Slack, Salesforce wanted to add an element of security as they want to go into different verticals, they could.
But what about like HelloSign and Adobe?
The same thing. So we offer a more secure, so Adobe has Adobe Sign, that we offer a more secure version of that. So ours has been designed by lawyers for lawyers. The reason that we're out here raising is that we've never gone beyond the legal profession. Now we're ready to expand.
Great, thanks.
Joe, do you guys have IP?
Yes, we have a full portfolio that we can share.
Thank you. Dan?
Yeah, it's an interesting market segment. I've lost money in this exact segment, investing in an Israeli company that was targeting the legal profession. And lessons I learned from that experience is that it's highly competitive. There are a lot of companies who are doing exactly what you're doing, and that there's there are gorillas in the market. I mean, there's if you talk to just pure document storage, you've got Iron Mountain, and their legal storage unit. And in communications, you've got secure WhatsApp and Zoom and things like that. There are DocuSign itself has 100 competitors around the world, and so it really you need to come in and go big. And I'm just be very, very cognizant of the fact that it's a what you're selling is convenience and utmost security. It isn't 5.9 security. You need 100% security, because once you blow the trust, your business model's blown.
Well, Dan, we'll count that as your feedback. So, any other questions? Oh, yes, F.
Yeah. So what most intriguing about what you do, and I'll give you some really good feedback, is the disappearing contract and some of the audiovisual sync with capture there. Are those pieces that you've built yourself? Have you bolted on technology there? Talk to me a little bit about that.
So on the secure side, on the document storage or document transfer.
Yeah, no, I'm not asking. I'm asking about the disappearing documents.
That's been built internally.
Okay, and then on the video, audio sync with the visual sign component.
Those have also been built internally.
Okay, thank you.
The only thing that we haven't built internally is the immersive audio SDK.
Yeah, that's good. That's fine.
Okay, so we're going to switch to feedback now. And F, it's actually your turn to start first, and then Sandy, and then Chris and Scott. Unless you don't want to go first.
No, I'll go first. So Joe, I mean, coming off the last presenter, you're like a breath of fresh air. I almost mailed you a check just because it was wonderful. Just so, first of all, that was it. You were humble, you were thoughtful, you gave us every piece of information, and now we're asking you lots of great questions. Like some of my other colleagues, I actually have invested in your space and had an exit with a company that did, in the legal space. So one, you make me further happy. And then the original name of the company that bought mine that gave me the exit was actually called Enlighten, just like yours is spelled, and probably should check the trademark there. So I like you even more. So, all these things are good. Now, the things that I would just kind of zero in on a little bit. I like you're in a niche. If you've made money in legal and you can grow there in the legal services niche, I think that's pretty reasonable. There are some really big niches. It sounds like you're starting to get there, being a point solution for very unique scenarios, which are big unique scenarios like telecom contracts, insurance contracts, buying automobiles, transacting real estate in certain states that are not as advanced as others. Those are huge business. If you did nothing but made this the settlement tool that New Jersey agreed upon, this is a big company, someone's going to buy you. That's awesome. Okay. I'm interested in your audio video. That's my background in the disappearing contracts. That's cool. To me, talking about secure storage and the web and, the app and all that, look, man, don't talk about that. Tell me that you know how to do that. That's an inherent piece of the story. Give me something like the visualized approval. Like, for example, today to complete transactions, they have to turn on a tape recording. They have to turn it off when my credit card comes in. They need that audio verification as part of it. If you demand to get that back, from someone you've made a purchase, that can take years, if ever. So, this is a really unique niche. I really like it. So what I'd love to do is hear more about how you zero in on that niche going forward, these niches, how big they are. Don't give me an enterprise market story. Don't boil the ocean. Give me like 5 of these giant niches that if you just do okay in those, you're a big, huge company someone's going to buy.
Thank you. Sandy?
Yeah, I'm just building on that. My one piece of feedback, this was a really good presentation overall. I think, you want to probably just get things tightened up a little bit more just from a time standpoint, because I'm just yearning to see your last two slides, because I know there would have been amazing. But I did on your upfront slides where you're talking about all these other different industries. One of the things that I think helps the investor get into conversation with you, building on what F was talking about, is tell me which you're going after first or next and why, because that gets you into a conversation where they're understanding your thinking and they're understanding that you're focused. And I know you have all the answers to that, but that, and then, you know, and then it's good to list, and there are these others, but just take people through one and, you know, and then help them understand, like Scott was sort of asking about, you know, sort of the structure of a deal, right? What is that? What do those elements look like? And I think that will help improve what's already a nice story.
Thank you. Dan, anything to add to your earlier feedback?
No, I think I got all out.
All right, good. Thank you. Ed?
Great presentation. I love the product. The only thing I would love to know more about is your go-to-market strategy to capture this new market, right? Your cumulative revenue up till now, after 15 years, is only 8 million, and you are projecting 20 millions in 3 years. How are you going to do that, right? I think if you can include that, that will make it more believable. Thank you.
Thanks, Ed. Chris?
Great slide deck. I like the presentation in that regard. And we discussed this, that you really want not to miss out on a visual. You did perfectly on that. And some people get angry if you don't have that, apparently. Likewise, to me, it's very important that you have a value proposition. I missed that. We are using Zoom and I'm using DocuSign. Why do I need your company? I could not figure this out. So if you can find out why in the world would I need you, and put this into your pitch, I think you will not. It would significantly strengthen your thing, and why other people can't do that. I think that hopefully would help you.
Okay, Scott?
Joe, let me focus on 2 items. I've invested in 3 software companies in the legal tech space, and I love the space. I've always made money in the space. I had one exit was for $460 million. It's a significant enough space that venture capitalists know they can make money in it. It's also a good launching niche. And I think F's talked about that. You don't need to tell us there's a bigger market. We understand if you can work in the legal space and start there where there tends to be a little bit less competition, you can expand later. So I wouldn't be defensive about, hey, we've made great traction in the legal space. That's a good sign. But there was something that bugged me about your slides specifically. So I'm just going to give you some actionable recommendation on slides alone. You said your customer is Simon & Schuster. I would have that logo out there within, you know, somewhere in the first 4 or 5 slides, because it establishes credibility. I have a customer, it's Simon & Schuster. I'm like, oh, okay. So that means your product works. Also your slide 1 or 2, I can't remember, you had management team slide and you said, hey, we've got lots of experience, but you didn't have any logos of which companies you worked for or which your co-founders worked for. Once again, a simple logo on a simple visual establishes credibility. If you work for companies that I know of and heard of, and you just have that logo there, it establishes credibility. And so I would put that there. The third thing you did mention, I don't think it's in the slide, but you said, we have core investors and they're sticking with us or something like that. Once again, if you have core investors that I know of, it's called brand association. You know, if they're impressive investors, your whole presentation will go a lot smoother with me if I see, oh, so-and-so angel who I know really well invested in this company 6 months ago. So all those little tiny things could enhance those first 6 slides. get your audience listening more intently because you've established credibility. I hope that helps.
Thanks, Scott. Great feedback from everybody. Appreciate it. Okay, let's vote again. 1, 2, 3. We've got 3 and 2 is 5 and 4 is 9 and 4 is 13 and 8 is 21. Okay, you got the lead so far, Joe, in this round. Next up, let's welcome back Carolyn with Sisu Global. And you want to unmute, please.
Yes.
After you get your deck up.
Yep. Can everyone see the first slide?
Yeah, you want to go to full screen. There, we're ready when you are.
Excellent. Hello, everyone. I'm Carolyn Urena, CEO and co-founder of Sisu Global. And we design medical devices that operate anywhere there is a surgeon. 100 million units of blood each year are missing. And blood costs over $100 to process each unit in the US and in emerging markets. But when a clinician reaches for that blood bag, it often isn't there, which means that life-saving surgeries are unable to be performed simply due to lack of blood. And there is a solution, a better solution, where a patient's own blood can save them. And when you think about it, your own blood is better than someone else's. At Sisu Global, we have brought auto transfusion to a global reach with our patented device, Hemofuse. Hemofuse has been used in across 20 hospitals, where it has been used in OB/GYN, orthopedic, as well as general surgery. In many cases where blood is pooled internally, Hemofuse can capture that blood, filter it, and give it back to the same patient in the same surgery so they don't need someone else's, essentially donating blood to themselves. Existing auto transfusion devices that are on the market are designed for markets that have blood. They're expensive, they're overcomplicated, but Sisu Global has designed a technology that even Medtronic has called a technology that leapfrogs their own due to its ability to operate anywhere there is a surgeon, whether that's a large hospital or if it's a combat zone. Hemofuse has a $5 billion total addressable market. We already have traction within emerging markets, which we chose to focus on first based on the need, regulatory barriers, and exit potential. Right now, with over 50% shortage of blood in most emerging markets, access to blood is the difference between performing surgery and not performing that surgery. We also have great board of directors, experience, and interest from the US military and veterinaries market we are not focused on at this time, but is a great opportunity for the future. We've demonstrated substantial traction with what we call our commercial MVP within Kenya, and on just 3.5 million of investment, we have achieved $945,000 of revenue. And you can see the response from our customers and our response in key news features on the right with some of those headlines. We have a business model where we both enable surgeries that would not otherwise be able to be performed, and our strong business model is where we sell Hemofuse in a pack of 25 with a reusable device and disposable filter and accessory kits to wholesale distributors. We're sold through the largest medical distributor in Kenya. And we also have training in partnership with the largest Africa-based international NGO, all sold at a price point similar to donor blood, but enabling surgeries where blood is also not available. Our go-to-market strategy is first, we focused on our key beachhead country, Kenya. We are scaling right now to individual countries. And then when we achieve our US FDA clearance, in addition to our existing international clearances, this will enable regional expansion and entry into the US military. We will reach 4,500 hospitals in the next 5 years with our distributor sales model to enable $63 million of revenue, where we have linear scale within geographies, but what enables an exponential scale is by adding these other countries. We have a tenacious team. My CTO previously founded a medical device design firm for Ghana. I previously founded global company focused in India, and our COO has over 20 years of senior management background. We have lots of awards and features with a lot of key names, and we've set up ourselves well for exit. Right now, with COVID-19 and that traction that we are having with the resulting severe shortage of blood, we're raising a $5 million Series A to enable the $63 million of revenue for geographic scale and entry into the US military.
Thank you, Carolyn. All right, you guys ready for questions? Yes, F, and then Sandy, and then Dan.
Let me give it to Sandy because I always I'm like the Jeopardy guy here or something with the hand.
All right, we'll go Sandy, Dan, and then F. Sandy.
Great. Carolina, very good presentation. I understand the Kenya is and that area is probably part of the genesis of this project. But I'm wondering now with COVID and particularly Medtronic and those discussions, as well as some of their those other players, what's causing you to stay with that focus versus shifting to pivoting more faster for US market?
So interestingly, when you mentioned Medtronic, you mentioned GE in those conversations, the interest is in emerging economies. That is where the growth in the medical device market is happening. All of these companies are pivoting and trying different models to tap into that growing middle class and growing spending on healthcare. And so that is where the interest is with those companies, is to look at Sisu as that acquisition for that brand into those emerging markets. There is a market for Hemofuse in the US, but actually we are focused on ROI and that return on investment, that market size, that need to have a strong business is in emerging economies. It's a business decision.
Thank you. Dan?
Yeah, I spent 28 years in emerging markets. And my first reaction was, wow, this is a cool product. I mean, you guys are doing a lot of good. And, this is very much needed. And so there's a lot of, social utility here, I think is very cool. One of the things that strikes me is that because there's so much social utility here and because you have so much publicity, you should have access to soft money and raising capital, whether it be, foundations or donations or government grants or whatever. Have you explored that, and how much more potential do you think is there?
So we have explored it. We have partnered. We look at sort of that non-dilutive, for that different funding. We have different grants that fund activities, and we also have foundations, NGOs, governments as a revenue stream and customers as well. We consider impact projects. We've had contracts with USAID to implement Hemofuse, measure the impact. There's further possibility with USAID, the Canadian government, organizations with Doctors Without Borders. All of our revenue sales projections and that scale up, the overwhelming majority is based on those sales numbers. So we have 60% margins with room to grow to 80% with some design changes. We have a strong, that private sector model as well. So we look at those two revenue streams, one as, direct sales that can have month-on-month growth, and the other is these big projects that can really scale us even further, even more rapidly to tackle a lot of markets. So
yeah, I would just think that finding soft money should not be that hard. There's got to be a lot of again, given the social utility of this. I worked in I brought I was the first investor to bring Western healthcare to Romania.
Mm-hmm.
I remember the early days in the 90s, what it was like. So this would work.
Yeah, good. If you have any further specifics on those, I'd love to hear them too, for any organizations beyond, the Gates and the, USAID, and I can list a wide variety, but always looking for more too.
And Dan, I spoke to Carolyn today, and we're going to put her in touch with the gentleman that helps companies get non-dilutive funding, who was I did a fireside chat with, who's absolutely fantastic, Kevin Kamak with Aegis Creek. Last question from F, please.
Yeah, so a couple of quick questions. First, and we'll get into feedback later. Great deck, helpful. A little confused on a couple of issues. So let me give you three, and you can kind of just quickly respond to each. It was unclear whether you were suggesting you were going to go at a 510K, and or full FDA clearance to move into the US, number one. Number two, you called out the veterinary medicine market, which I actually think is your entry point to the US. I don't, wasn't clear how you were going to get there. And then sort of the third and final point was, you compared yourself most specifically to what I would consider significant first world medicine versus other technologies or techniques that have been currently used in your style. If you could just kind of walk through those quickly, that'd be great.
Yeah, super quickly. We are going through, we have clearance Ghana and Kenya and ISO 13485. We are going through a 510K. We had our QSED meeting last November. It's for a fully single-use version of Hemofuse. We expect to have that by the end of May. We're submitting with all the test results in hand in the next couple of weeks. Veterinary is not our initial entry into the US market. It is a much smaller market. There is a high need. Animal blood can cost $400 per blood bag. But in terms of success, is based on laser focus. That as a market, that is an additional product addition, is not a focus and not worth the time investment right now. We are seeking specific partners, potential licensees. It is a potential revenue stream as well. And we found US militaries where we have traction as that entry point. Three, and compared to other options, the reason I compare to those US equipment is because 80% of all medical devices is made for 10% of the world's population. Those are the equipment that exist. Other techniques to perform autotransfusion involve anything from not performing the surgery at all, delaying, calls out on WhatsApp to find friends and family to donate, or some innovative clinicians will do manual techniques to scoop blood out, filter it through gauze and retransfuse, not because the money isn't there to pay for blood, but because the technology is not designed for that infrastructure and market.
Thank you. Yes, Chris, last question, please.
What are the pros and cons compared to the cell saver from Haemonetics? And how do you solve coagulation issues?
Yep. So to answer that indirectly first, autotransfusion has been around since World War I. We know the ins and outs very deeply compared to the cell saver. From a clinical standpoint, there have been no clinical studies that show any different to the additional processing steps versus whole blood. That said, there are cases of which cell salvage is better. Cardiac surgery, things, cesarean section where you want to wash out certain components. When you want to give that whole blood back with all of the components, with not just the packed red blood cells, you want to give back the platelets, the plasma, then you want to use whole blood. We've seen better design around trauma, where you need to have and give that blood back immediately. So I could walk through the technical nuance, but really we follow AABB standards. There are no problems with coagulation in trauma blood. Clotting factors are depleted. You want to you can retransfuse up to 3 units. After 3, you can get coagulopathy. There can be issues, but that's on the standards of AABB and standards within autotransfusion. We've been used extensively. We've seen very successful outcomes with the product.
Thank you, Carolyn. We're going to switch to feedback, so you can mute yourself. It's going to be Dan, Ed, Chris, Scott, F, and we'll finish up with Sandy. Dan, you're up first, please.
I like the fact that you're focusing on emerging markets. I think that, try to understand the reason why you're going to get bought is going to be your sales channels, your existing relationships in new markets, your footprints. It's not going to be top line revenue. It's going to, how many more products, for example, can Medtronics, push down the same sales channel that you've already built in these markets. And I think that that's positive. I think that you should, you're already getting together with some soft money sourcing. That's positive. And like I said, there's outside the United States, there's much less regulation, much fewer hoops, much faster, to the customer. I think hitting them where they ain't, I think is a good target strategy. Everybody doesn't have to be in the US to do well. And I think you're doing a lot of really good things. I really like the presentation.
Great. Thanks, Dan. Ed?
Yeah, great presentation, very informative. I don't have much to add. The only thing I would love to know is, what is your exit strategy? I would like to know, like, who's going to bite you?
Okay, thank you. Chris, this is your area, not blood per se, but clearly medical.
I'm an anesthesiologist and intensivist. So I've actually used cell-saver and cell-saving autotransfusion techniques with probably nearly 100 patients in my career. So I know the technique, I know surgeries, I know how this is done. One of the issues is with the cell-saver, when you have there the sucker of the blood, you don't have 500 cc's that you actually need to can suck out with the syringe. It actually comes in milliliters and milliliters and milliliters. You collect this over an hour, and then you centrifuge it and isolate it and give it back. So with your technology, for all those applications, for all standard surgeries, where usually bleeding is not coming in 1 liter in a second, this approach with a syringe would likely not work. And therefore, I'm not sure how practical your solution is for the emerging market. What I do see is a potential for the military in combat, when you have a patient that had occult big bleedings, abdominal bleedings, or even in the hip or in bones or whatever. In those situations, I could see a utility. So I think for the Department of Defense, that's a niche that might work. And you might want to combine this, and you probably are thinking around those things, with a constant suction, that you actually have a constant suction there, and then you do the filtering, and then you give back the whole blood without the isolation of those components. Then you have a chance. If you combine this with constant suctioning, you may be able to use it even in the third world. But that's, one needs to look closer into the technology. I found it unfortunate that you didn't disclose it from the beginning when I was asking you about the pros and cons.
Thanks, Chris. And it's wonderful to have somebody with so much domain expertise on the panel. Appreciate it. Scott?
Caroline, I thought it was a great pitch, and it's a very cool product. I don't invest in that area, but I have one point of advice on trying to raise money is I don't think you should pitch Africa, target market, and the US military in the same pitch. I think if you're successful in Africa and if things are working there, great. Go to investors who invest in emerging markets or Africa. And it's a very focused pitch by you, and they'll understand the potential. Or do defense and say Africa didn't really pay the bills. I gotta get out of Africa and I gotta go to the defense. Combining those two just creates a lot of confusion in my mind. FDA clearance, well, no, it doesn't apply to Africa. Things are different there. I mean, I just start to get all this mixed up. And I think there's very specific investors who focus on emerging markets. They're probably your best target. But if you go to US investors, I think it's a stretch. It's a stretch to talk about Africa. You'll just be bogged down in 85 meetings of them trying to learn about Africa, the target market. So anyways, I would declare one or the other. And it's not that you can't mention future markets, but if your current market is Africa, go for it. I think you could probably raise some money.
Thanks, Scott. F?
Yeah, so Caroline, that was a great pitch. I mean, you should teach PowerPoint classes. It was a little word-wally at points, but in general, super impressive. Your answers, your sharpness, you took notes, top tier executive. So super impressed. I differ a little bit from Scott. I think he's very correct in the fact that you have to go to the right type of investors. But Africa and the military is actually a good combination, because I think a lot of the folks that invest understand that. To me, my push in the questioning was, comparing it to the other first world medical devices, to me, these are sort of trauma kit devices. And otherwise, there are some other ways that people do this overseas with suction, et cetera, suction devices. I was hoping you'd come a little more straightforward there. And then the last piece was kind of the veterinary market, right? If you're going to hang the flag, own the flag, I think you can own it. You're way sharp enough to know that story. So my sense is, there are definitely healthcare investors that get this. I would focus on the expendable folks, people that have done a lot of stuff in the urinary areas and so on. And then certainly to Max's point earlier, he should connect you with it. There's a ton of non-dilutive funding there. I mean, there's DARPA money, BARDA money. I mean, there are like, 3 to 10 letter syllables that are out there. I know BARDA has like a piece with the Air Force on this. Specifically. Then there's the whole category of social investors. There's a ton of money out there for this. This is what they're looking at from the Gates Foundation down. Tons of family offices that live for this stuff. I mean, honestly, you're the brightest star they will have seen in years. I mean, you just hold out your hat, show them this deck and the performance, and collect cash. Coming to a bunch of curmudgeons like us that are going to grind you out based on like every other device we've ever seen is really tough. So just want to kind of put that out there, but super impressive.
Thanks, F. Sandy, you want to wrap it up for us, please? You're muted, Sandy.
Sorry about that. I also was thinking about family offices for you. So I really encourage you there. I didn't see, one thing I didn't see in your deck is IP. You may have had it in there. It just went fast, but IP will be important for you, particularly if you're, if your long-term plans are the world, right? And the other thing that for no matter what type of investor, I would really like to see you have an advisor who has sold to, has experience selling to medical device companies, or they've had companies that have done that in their portfolio. And, I'm happy to talk with you offline about some looks like candidates and things like that. But there's a lot to parse out with this company because there's a lot of different opportunities. And so, this is an important pick. So it's okay to take time. It's better to take time and sort of find the right person or persons who really are passionate about what you're doing, but also who can really help you think strategically and position yourself as best as possible with the variety of deals that this company can do. So again, congratulations on a great presentation overall.
Good. And I also want to mention we're talking with Carolyn about helping her find that person to tap into the military market as well. So, okay, if you guys are ready to vote again, 1, 2, 3. We got 5, 7, and 9 is 16, and 3 is 19, and 4 is 23. You've got the lead, Carolyn. Congratulations. But some tough competition coming up here in our last presenter, I'm sure. I want to welcome back Joshua Mcclure with Maxwell Biosciences. Welcome back, Josh. So if you want to share your screen. And if you can go to presenter mode.
Yeah, almost done here.
Okay, good. There you go. Great. We're ready whenever you are, sir.
Maxwell Biosciences is developing a completely new class of drugs. Our small molecule drugs mimic human immune system molecules, only with vastly improved pharmacological properties. We can, in effect, program our drugs to target a broad spectrum of pathogens or target specific classes of pathogens. Hundreds of peer-reviewed articles evidence that the drugs effectively address antibiotic-resistant bacteria, difficult fungal infections that shut down hospitals at times, limited types of cancer, and importantly, viruses. Unlike our antiviral competitors like acyclovir and Tamiflu, our drug completely destroys a virus, including the coronavirus family, hepatitis family, and the herpes family of viruses, which you see illustrated here. This electron microscopy image shows proof of our mechanism of action, destroying the viral envelope. Untreated control on the left, treated virus on the right, with mostly only negative space remaining on the treated virus. Our drugs act like a target-specific detergent, dissolving the viral membrane, exposing and binding the internal proteins and nucleic acids. Here you can see detailed confirmation of efficacy and safety against SARS-CoV-2 with a drug candidate that shows zero toxicity in human lung tissue, not low toxicity, zero toxicity in human lung tissue, even at very high concentrations, giving us safety advantages as we approach human trials. The broadest addressable anti-infective market is in the range of $120 billion annual revenue, not including the well-published anti-cancer efficacy of our drug class. Here's how it works. Your white blood cells destroy every kind of pathogen, bacterial, fungal, and viral, with a potent but delicate natural molecule called LL37. Maxwell's drugs are not that molecule. We have an improved synthetic mimic of LL37, developed using Department of Energy funds at Stanford University, Northwestern University, and NYU. We bought the patents. They are strong composition of matter patents and have passed diligence. We own them outright, and they expire in 2030 out to 2040. Here's our go-to-market part and drug pipeline. We're working with the DoD and Department of Homeland Security to secure very large grants and warp speed designation. Now, even without warp speed, it's only 2 years away from human trials. We plan to IPO in phase 1 in just a couple of years, with multiple drugs generating royalties via large pharma company partnerships. Here's our funding strategy. We'll leverage over $24 million in government funding and ongoing use of government facilities. We're starting our Series A raise now. We're offering you a chance to participate in this Series A along institutional and strategic investors with an IPO pending within 3 years. This capital outlay gives us the data we need to begin human trials and excel in raising money from blue blood institutional and strategic partnerships. I'm Joshua Mcclure. I have over 18 years of experience as a technology CEO and 5 years of specific biotech CEO experience. Mark is a former Johnson & Johnson VP of Research and Development. Steve is our lead investor, former Chief Technology Officer of Sprint, a biotech innovator, and managing partner of Yucatan Rock Ventures, again, our lead investor. Dr. Sheetal Vali is an experienced drug development professional and pharmaceutical chemist with experience in our drug class. Dr. Barron is our co-inventor and scientific co-founder at Stanford University. Dr. Kent Kirschenbaum is a co-inventor from NYU. He brought along 6 patents and is our Chief Scientific Officer. Preclinical IPOs have a recent history of pre-money valuations upwards of $1 billion. We have an institutional $50 million term sheet in hand. To sweeten deal terms for an immediate follow-on raise from institutional investors, we're asking for just $6 million in a standard priced equity round to quickly generate highly valuable data in non-human primates.
Actually, you're out of time. You're out of time. So you're not going to get to cover the forward. You're not going to get to cover the forward-looking statements, which I was trying to read.
That was the last slide.
Yeah, I know. Good. All right, F, please.
Yeah, first, let me ask if Chris has any questions, because he's the one with the MD, and then I'll ask questions.
Yep. Chris?
So you have been around for 4 years, and what I'm missing is, and you said there is a good therapeutic index. What I'm missing is the evidence that it is effective to kill viruses in, at least in vivo, in animals. Do you have any of that?
We do not. We will have that within the next couple of months. That's what the $6 million is for. We have a working model in mice We are developing a working model in hamsters as well as in ferrets. And we also have a model that we have developed in primates. So we've actually been around for 5 years. Over the past 5 years, we have been developing the lead candidate as well as formulation and generating the various different grants, the $24 million in grants to study the various different types of compounds. Remember, this is a whole new drug class, right? So we also had to aggregate the patents from all over the United States. So from NYU, Northwestern, Department of Energy, et cetera. So we own all of the patents on this drug class.
How much have you invested yourself into the company?
150,000.
And
Okay.
how much have other co-founders invested?
The two other co-founders are university professors. They don't have the money to invest.
And you think then a 75 million pre gives to the current investors plenty of upside?
Oh yes, absolutely. With drug companies that don't even have close to this disruptive of a drug class, the comps that I showed you, the pre-money valuations on those IPOs, and we're approaching IPO within the next 2 years. So those companies had over $1 billion pre-money valuations at their IPO. A good example would be Moderna. Moderna had consistently failing preclinical studies, failure after failure after failure. They did a Hail Mary in primates, which was absolutely brilliant because they have a modified human mRNA, similar to our modified human innate immune system molecule. In fact, they used the same chemical process where they switched an attachment from the carbon to the nitrogen, same exact thing that we did in modeling a peptide and making it more stable in the synthetic. And their results then were absolutely positive, knocked the ball out of the park in a closely related non-human primate. That's what we're doing too. So they took their 2 primate study to AstraZeneca and got a $273 million strategic investment. We're doing 4 primates, and we have not had a failure in preclinical studies at all in the last 5 years. We've been extremely risk averse up to this point, taking it one step at a time.
If you can show some clinical in vivo data that support your statement of the wide therapeutic index, that would be nice. Think about one slide that actually kind of gives a reassurance that it's technically de-risked. That would be a nice de-risk.
You mean preclinical?
I mean in vivo data.
Yeah, in vivo. Yeah, we will have that within the next 60 days.
Okay.
Thank you. Any other questions? A lot of great questions from Chris. Yes, F.
Yeah. So I don't know how many other folks on the panel, but we have a company in Warp Speed right now. They've been in the program, multi-million dollars. They're moving into phase 2 of Warp Speed with lots of $1 million behind that, probably, maybe even 8 or 9 figure numbers. Why are you not in that program right now? Why aren't you looking at some of the EUA potential there? At least to be able to drive BARDA to do some of this proof points that Chris is talking about. I mean, that should be a slam dunk on the BARDA side. I think, it'd be really helpful to understand that first. The next one is, when you got to the, I didn't really understand the financial structure. I know it was quick there. How much raised, how much there? You showed us use of proceeds. You told me you got $50 million deal. By the time you got done with that, it sounded like a pump and dump stock thing. So if you could just walk me through a couple of those pieces real quick, it'd be very helpful.
Sure. We're not a pump and dump stock. There's been literally hundreds.
Yeah, no, that was a joke. Let's go back to
not a good joke. So let's not talk about that. We're talking about an IPO, so let's not talk about pump and dump. That's real. So that doesn't happen here. So this is it's technology that was developed at the Department of Energy. So it was developed by the federal government. We bought it from them because they failed to commercialize it. We have applied to BARDA 3 times. The director of the Warp Speed program was initially a program manager out of BARDA. She pitched it directly to President Trump and was immediately fired upon pitching our drug to President Trump directly. This was after President Trump had already authorized multiple billions of dollars to the vaccine programs.
That should be a slide in your deck. I mean,
can't
all
put-
of us, about half
it's
of the
not
investors
political.
here would have used that as a baseline to like invest right there.
It's not politically correct. We've been advised we can't do that. I've lost 2 lobbying firms because of that. Like the Trump administration would not work with the lobbying firm anymore if they kept us as a client. So I can't put it in writing. I can tell you about it, but it's now we have a new lobbying firm. It's the top 5 fundraiser for the Biden administration, the #1 fundraiser for the Kerry campaign. I know the Department of Energy incoming secretary personally. We're doing everything we possibly can to get in front of them. We have a electron microscopy image of the SARS-CoV-2 virus being completely destroyed by which came out of the University of Texas in a collaboration with University of Louisville. Had nothing to do with us. They asked for our drugs and did it themselves. So there are collaborators all over the United States right now who are aware of our drug class and are funding the tests themselves. We haven't not invested a single dollar in SARS-CoV-2. Our commercial program is herpes.
I love it.
We're out of time. We're going to have to switch to feedback, but I should say, I was going to say shocking, but it wasn't shocking. Your response from the former president. Okay, we're going to switch to feedback. Enough of my leaning in on the political side. We're going to start with Ed, Chris, Scott, F, Sandy, and we'll finish up with Dan. Ed, you're first, please.
Just more information, a lot more information than I need to know. I want to know. Seriously, great presentation. I don't have anything to add to it, so I'm going to pass to the next person.
Thank you. Chris.
I think if this works, it looks like a game changer. If there is sufficient IP around it and a game changer that's really big. What is unfortunate is that one has that the management team doesn't seem to understand in terms of the pre-money valuation that if this is the first money in, actually it significantly limits the upside of early stage investors who put their money in there. If you start with a $75 million pre, that's depending on how much you raise, the dilution effect that you have. So the upside you give up, if you were, let's say, had a 25 million pre, is fractional compared to the upside that an early stage investor has with 25 compared to 75. And so therefore it's, I feel a little bit, you try to squeeze out as much as the market can bear. and that makes me uncomfortable.
Okay, thank you. Scott.
I have no feedback.
Okay, thank you. F?
Yeah, I mean, so let's see here. I mean, to Chris's point, I think you need a few more proof points to kind of come out as strong as you're coming out in this point. I get it. If it's right, and it sounds like it is, then you have every right in the world to demand those prices. We're not, pharma investors. I respect it. I hope you're a zillionaire one day, and more importantly, solve a lot of the world's problems. But I do think you do need to get a little bit of the in vivo stuff down. You've got to get these. If you're doing it with university researchers, whatever, you got to get it on record. Commission your own studies. They're not that expensive to get just baseline data out there. Just give us enough to go hook, line, and sinker. The company I was mentioning, Award Speed, very similar profile of yours. $12 million backstories there. Government didn't commercial. It wasn't exactly the same scenario. They're in diagnostics, but I would tell you that just a little more proof points, just makes the whole thing fly.
Thank you, Sandy.
Yeah, Josh, really beautiful presentation. This is one of those things where you're going to have the data that you need to have within 60 days, as you said. And, so this is the opportunity to get exposure to, as I guess your agenda today has been about pitching to investors, which is awesome. And then you're going to be able to come back and say, remember when you saw this, this is the data that we wanted. So, and this is a great strategy to be able to come back and update investors and say, here's where we are. These are the results. Here, this means the following things. Are you in? So I think you're gonna be able to create a lot of momentum around this. And one small little thing, just because I used to spend some time dealing with Stanford University licensing and faculty inventors and things like that, is I saw that you have patents from a lot of different universities except for Stanford, and yet Annalise is a co-inventor. And so I don't know if I just didn't hear right, but I didn't hear that you had licensed from Stanford. So that would just be a diligence question for me.
We haven't licensed. She was at Northwestern University when she invented it. So she's at Stanford.
Josh, this is non-rebuttal, so you unfortunately can't.
Sorry.
Yeah, no, I'm sorry. I teed that up. So you are, because Annalise has been at Stanford a long time, I know that affects sort of the life of the patent, right? So that's something, that will come up for you on that particular one. So, that could be an issue. The other thing is, I was really interested to hear about the $50 million strategic investor. So that's something that helps sort of, gets investors' attention at least. And so, how you talk about that can be more compelling perhaps than it was today.
Thank you.
Thank you. Dan, if you'll finish up for us, please.
Yeah, I'm gonna take a little different tact, maybe because of the sandbox I've been playing in the last 30 years. If this works, and I'm assuming it will, you're gonna have a lot more than just friends out there, and you got to play defense as well as offense. Not everybody's gonna be wishing you success. There's gonna be jealousy. You're disrupting industry. You're putting people out of work. You're erasing a lot of other companies' investments and what they're doing. And so you need to be prepared to play in the big leagues here, because right now you're underneath the radar of a lot of players, and once you start to go out and your head pops up, people start taking shots at you, and they'll spread misinformation, and they'll do a lot of things. I think that the good news is this has extraordinary potential. The bad news is you're in an extraordinary vulnerable position when you're early on, when you don't have your defenses built up. You don't have your advocates, you don't have your reference customers, you don't have your lobbying, your PR firm, your white paper, your Gartner services, whatever. I think that's defending this technology through all its phases of development will be a challenge. And again, assuming it does work, this is going to piss off a lot of people, and it's going to make the majority of society a hell of a lot better off. So I just want to throw that out, and that everybody wants to be a believer here that's on this call.
Great, wonderful, thank you. And I also want to add, Joshua, that you just found out today you were pitching and didn't even know the times, and you did a great job of preparing on the fly in between runs. So kudos for that. Not easy. Let's vote for the last time, please. 1, 2, 3. We got a 5, and what have you got, Dan? 5, 10, 15, 19, and a 3 is 22, and 4 looks like 26 out of 30. Not a bad score. In fact, it's a great score. I'm just kidding about it being not bad. You're the winner for this afternoon, and congratulations to you. And I join the other panelists in hoping this works, and it's wonderful. And I'll also see you tomorrow morning on the Keiretsu pitch. So great job.
But we'll probably have a billionaire take the entire 6 million. We're already in deep talks with them. We've had 3 talks in the last 2 weeks.
Wow. And that's a billionaire not named Trump?
Oh, no.
I'm kidding about him being a billionaire, and I'm kidding about him investing.
Yeah,
Sorry,
that's why
that
where we're at. That's why we don't have
there.
the in vivo data right now, is because of him. It's he's blocked us at every opportunity.
Wow.
Wow. Okay. So a number of thanks I want to give. First of all, to the entrepreneurs. This is not easy doing what you did, and you all did a great job. Really appreciate that. I said early on, you're going to love this panel, and I told my team, Ivy and Adrian, we've got a dream team panel, and you guys were all great, all adding wonderful stuff, and great having the domain expertise in so many different areas in the medical field. Chris, thank you for being here for that. So today is the last day that Ivy Richter, who you see on the screen, is our intern. She started last July. She's now in her junior year at Miami University in Ohio, and her parents let her come out to a COVID-infested San Francisco last July to intern at PitchForce and work for People Connect, and she has done a fantastic job. And she's learned so much about the startup world, and has been just, I've had great interns for the last 7 years from Miami, and she is the best. And I just want to thank you and congratulate you and wish you the best, Ivy. So great job. Thank you so much.
Thank you all. Sad to go, but it's been an amazing past few months. So thank you.
Thanks, Ivy.
Thank you. Great work. Super impressive.
Wonderful stuff. And now Adrian, who you see, Adrian Chin, is taking over and is going to do a great job. Adrian is a senior at Cal Poly San Luis Obispo and is doing a great job in her training and now taking over. This is the first PitchForce she's run all by herself. So great job. And thanks again for all you panelists for giving us 2.5 hours of your time and wisdom. We'll follow up with the presenters and panelists, putting you in touch. And if you want to join us next week, we've got a seed round where we'll have angel investors, and the following week cannabis on February 11th, and another A round on February 18th. We do these every Thursday, and just keep in mind that if you're looking to grow a great startup with great people, we can help. We've been helping startups do this for 21 years. We love what we're doing, and the reason that that it makes it's so great is to hear all these ideas from wonderful, smart entrepreneurs making a difference and making this a better country. So thank you all. Have a good evening. Appreciate it. Enjoy the rest of your skiing, Scott. See you guys. Thank you.
Thanks, Max.
Thank you.
Thank you.
Thanks, Chris.
Great seeing all of you. Thanks, Scott. Bye-bye.
Hey Siri, call Ivy Richter. Hi, hold on 1 second. Hello. Hi, hold on. I'll merge Ivy on this 1 second. Sounds good. Okay. Wasn't that great? Yeah, that went really well. Yeah. F texted me and said, was I too tough? Because he just blasted the shit out of that guy. And we had him coming. You only had one slide. Yeah. That was the most bizarre presentation. Thank you. Never seen anything like that. No, it's like, it just so pissed me off, as you could tell. And the funny thing was, I heard him say, I don't know, Adrian, if you heard him say when we were talking about the 1 minute, he said, I just got one slide. So I thought he meant he was going to put his slide up as a background, like Joe did with Enlighten,
That's what I thought too. I was really confused because when he put his slide deck up to test, he had multiple slides. Like he had other ones like after his title slide. So I just assumed he was going to scroll through it like everyone else did. Right. But I'm not really sure what happened there.
It was a major fuck you. It's like, I'm better than you. Everybody else, this is how they play the game. I'm not doing it. Like, screw you, Jack. It's like, you don't do that. Come on.
It's interesting too because he reached out. He was the one that reached out today, I believe.
Yeah.
And so normally when someone reaches out and they do the due diligence to, look over what they're getting themselves into.
Right.
Yeah, I have no idea.
Right. And Josh, on the other hand, because he was pitching all day, and, I don't know, you guys probably saw the thing in the chat, like how long is he didn't know there was a 1 minute elevator pitch.
Yeah. But then he ended up coming in and winning. So
He was good. I couldn't pass up that opportunity when he said Trump dissed him, and then he said he's getting money from a billionaire. And he's such a serious guy that he didn't realize I was joking.
Yeah.
I mean, that was very, very funny that he didn't.